Welcome back to the Daily Crypto Roundup. Today's episode is all about pressure, positioning, and what analysts are really saying as crypto heads deeper into the new trading week. Bitcoin has slipped, sentiment has turned cautious, and despite major institutional buying, the market is clearly being driven by macro forces rather than hype. We're going to break down why Bitcoin is under pressure, why analysts are split on what comes next, how institutions like Strategy are still buying regardless, what Tether's growing influence means for the wider market, how Coinbase is expanding beyond just crypto trading, and why many analysts are warning that this is a selective market, not an altcoin season. We'll also touch on regulation, global capital flows, and why this current calm could be more dangerous than it looks. Before we get into the headlines, let's quickly recap where the market stands. Bitcoin is trading around $86,400, reflecting continued pressure amid broader risk-off sentiment. Ethereum is near $2,932, showing persistent caution in the second-largest crypto. XRP sits just under $1.90, also feeling the market drag. Binance Coin is around $848, Solana around $124, and Cardano near 40 cents, all moving with subdued momentum. Dogecoin is trading around 14 cents, Avalanche near $12.50, Polkadot around $1.87, and Litecoin near $77, all reflecting a market waiting for clearer direction. The dominant theme across crypto right now is pressure, not panic, but pressure. Bitcoin weakness has been the anchor story, and it's important to group all of this together because it sets the tone for everything else happening in the market. Bitcoin has slipped below key psychological and technical levels, and analysts agree that this move isn't being driven by one headline or one event. It's the result of a broader risk-off environment, macro uncertainty, and positioning unwinding across both crypto and traditional markets. Coverage today has repeatedly highlighted Bitcoin losing ground below previously defended zones, reinforcing the idea that conviction remains fragile. What's notable is that this weakness is happening despite continued institutional accumulation. Michael Saylor's company, Strategy, confirmed the acquisition of over 10,000 additional Bitcoin in a single purchase, worth close to $1 billion. That brings their total holdings to well over 600,000 Bitcoin. In any previous cycle, a purchase of that size would have sparked excitement. Today, it barely moved sentiment. Analysts have picked up on this disconnect. Barron's noted that even massive institutional buys are failing to lift the market in the short term, which they see as clear evidence that crypto is being driven more by macro conditions than individual actors right now. In other words, the market is not ignoring institutional demand. It's being overshadowed by broader risk dynamics. Macro analyst Luke Gromen has been particularly cautious in recent commentary. He warned that Bitcoin slipping below key moving averages opens the door to deeper downside if macro pressure persists. Gromen framed the current environment as one where Bitcoin is no longer trading in isolation, but as part of a wider system reacting to interest rates, liquidity, and global risk appetite. His view reflects a growing consensus among macro-focused analysts that Bitcoin's strength or weakness in the coming days will be less about crypto news and more about how global markets behave. This framing matters because it explains why Bitcoin weakness is dragging everything else with it. Ethereum has remained heavy, struggling to separate itself from Bitcoin's direction. Broader crypto markets have followed suit, reinforcing the idea that we're in a phase where correlation is high and selectivity is low. Several analysts have also pointed to derivatives positioning as an amplifying factor. With large options expiries recently passing or easing, the market is still adjusting to reduce leverage and thinner liquidity. This can exaggerate moves, especially when sentiment is already cautious. Analysts suggest that once this adjustment phase passes, markets may regain the ability to move more cleanly. But until then, chop and pressure remain the base case. That leads into one of the most widely discussed questions today. Is this a breakdown or a reset? Analyst commentary has been split. Some warn that breaking below major psychological levels represents a structural shift that could invite further selling. Others argue that the market is simply digesting gains and clearing excess leverage. Crypto.news captured this divide well, noting that experts are split between those expecting further downside and those viewing current conditions as a potential accumulation zone ahead of future catalysts. Standard Chartered added another layer to the discussion by adjusting its short-term Bitcoin outlook while maintaining long-term conviction. Analysts at the bank lowered near-term expectations due to recent price action and momentum loss, but reaffirmed that structural drivers such as institutional adoption and regulated access remain intact over a longer horizon. This reinforces the idea that short-term pain does not necessarily invalidate long-term theses, but it does change behavior in the meantime. All of this explains why sentiment feels heavy but not broken. There is caution, not capitulation. And on that note, we are going to take a quick break for a word from our sponsors. Stay with us. Several commentators today highlighted that stablecoins may now be more structurally important to crypto markets than many individual tokens. Stablecoins determine how quickly capital can rotate, how risk is absorbed, and how volatility propagates. As their influence grows, so too does regulatory attention. This is a quiet but powerful narrative heading into the week. Michael Saylor's company, Strategy, confirmed another major Bitcoin acquisition worth close to $1 billion, pushing its total holdings to new record levels. On paper, this is one of the strongest institutional conviction signals possible. A single corporate entity continuing to allocate at scale, regardless of short-term price movement, reinforces the long-term belief that Bitcoin remains a strategic asset rather than a trade. However, the market reaction has been strikingly muted. Analysts see this as a powerful signal in itself. In earlier cycles, a purchase of this size would have driven optimism and momentum almost instantly. Today, it barely moved sentiment. This disconnect highlights how dominant macro conditions have become. Even aggressive institutional accumulation is being overshadowed by risk-off positioning, tighter financial conditions, and cautious capital allocation across all markets. Analysts interpret this as proof that crypto is now firmly plugged into the wider financial system, for better or worse. Analyst commentary today reveals a clear divide in how this phase of the market is being interpreted. One camp argues that Bitcoin losing key support levels increases the probability of further downside, particularly if macro pressure persists or liquidity continues to tighten. From this perspective, recent price action represents a warning sign rather than a pause. The opposing view is more measured. These analysts believe the market is undergoing a necessary reset, a period of digestion following strong gains earlier in the cycle. They argue that leverage is being reduced, speculative excess is being cleared, and price is adjusting to a more sustainable base. What unites both sides is uncertainty. Conviction is low, narratives are fragmented, and that typically leads to choppy, directionless trading. Historically, analysts note that markets rarely stay in this state for long, before a decisive move forces clarity. Regulation remains another undercurrent. Reuters reported today that the UK plans to bring crypto assets under a comprehensive regulatory framework starting in 2027. Analysts see this as part of a broader trend toward formalization. While the timeline is long, the direction is clear. Crypto is being pulled into existing financial structures, rather than being allowed to operate in parallel indefinitely. This regulatory clarity is welcomed by institutions, but often feared by retail. Analysts argue that regulation may suppress speculative excess in the short term, while enabling deeper, more durable capital flows over time. This tension continues to shape sentiment. Meanwhile, in Asia, institutional signals continue to emerge. Reuters also reported that Hong Kong-based exchange Hashkey raised over $200 million through an IPO process. Analysts see this as another sign that regulated crypto businesses can still attract serious capital, particularly in jurisdictions positioning themselves as crypto-friendly hubs. There's also a geopolitical dimension analysts are watching closely. Reports of crypto executives engaging with Middle Eastern financial centers, particularly Abu Dhabi, highlight a growing competition between regions to attract crypto capital. Sovereign wealth interest, regulatory clarity, and long-term infrastructure investment are all part of this picture. While not an immediate price driver, analysts believe this regional competition will shape where liquidity and innovation concentrate over time. Altcoins, meanwhile, remain under pressure. Analysts have been blunt today. This is not shaping up to be a broad altcoin cycle. Liquidity remains concentrated. Risk appetite is selective. Projects without real revenue or differentiation continue to bleed. Ethereum itself is expected to remain range-bound unless a clear catalyst emerges, such as regulatory clarity around staking products. This selective environment explains why many altcoins feel lifeless even as Bitcoin dominates attention. Analysts increasingly frame this as a filtering phase rather than a failure. Capital is cautious. It is choosing safety over speculation. Psychology plays a role here too. Analysts repeatedly note that sentiment feels strangely muted given the scale of institutional involvement in crypto today. This is not euphoria. It's not despair. It's waiting. Waiting for macro clarity. Waiting for confirmation. Waiting for something to break. Historically, these periods of compressed sentiment often precede decisive moves. Not necessarily upward, but meaningful. Analysts warn that boredom can be dangerous. It breeds overconfidence, leverage, and surprise when volatility returns. So when you step back and look at everything happening today, the picture becomes clearer. Bitcoin weakness is real, but it's macro-driven. Institutional accumulation continues, but it's not enough on its own. Stablecoins are quietly becoming systemically important. Exchanges are evolving into financial platforms. Regulation is advancing, not retreating. Altcoins face brutal selection, and the market is coiled, waiting. This is not a day for hype, it's a day for awareness. As always, drop your thoughts in the comments. And don't forget, one comment will receive 10 XRP, another will receive 5 XRP, with winners announced on Friday. Follow for daily updates, and stay tuned as this crypto week unfolds. We will see you at the top.